Morning, guys. Welcome to the premium webinar. It is Tuesday, 21st of November. And let's have a look and see what we can do today. So we've got a little mini agenda to run through. And we'll see what else we can work on as we go through it. All right. So we're going to take a look at the session review. We're going to do DAX and FTSE setups, outlook for the day. And if we get a chance, we'll take a look at some of the fork work as well. So trying to understand the difference between a regular fork and a mod shift fork in terms of maybe why you would use one over the other. And get you a bit more familiar with some of the other tools. All right, let's go and find the story. All right, so this was pretty much the story for yesterday. So there's a couple of interesting bits on there. Effectively, it was just a simple trending day. So we had two good trades. The DAX long at 963, which was during the webinar. I've got to be careful of that today. I'll try and see if I can get it sent out a little bit more promptly, a little bit more timely than yesterday. We were lucky yesterday because the price came back to the area that we wanted. So I got the kind of signal around here when we managed to get into it after the webinar, so we were lucky. As is so often the case with markets, when it starts to ignite or it starts to take off in one direction, it does often test the zone, the ignition point, to give you another opportunity to get in. And it's those points that we want to try and find. Those points we want to get in on. Anyway, so yeah, 963, we got out. We extended the profit target from 48, I think it was, maybe 45, can't remember, to 70, because the reward to risk ratio was a bit low, a bit anemic, wrong word, a bit skinny. So I extended it. And we've still got the FTSE long on. So we'll take a look at that as well. So congratulations if any of you guys managed to get any of that or trades of your own. All right, first things first, I've just spotted that it has taken along right now. There we go. It's just bought. So I'm going to simulate the trade in a moment, but it's just gone long at 44, stop loss at 14, and take profit at 148. Give me a second, and I'll actually, I don't know if I can use my scripts on here. Well, I've just turned the screen off just for a second, guys. Give me 1 second. Let's see what we can do here. So if this does work, great. If it doesn't, then just one of those things, isn't it? Not every trade that we take is going to work out. We know that already. But if I spin this trade over now, I'll just chuck it into the channel. Maybe at... Let's see if we can get 37, something like that. That'll do. Let's have a look and see if this works. What have we got here? All right, sorry about this, guys. Just, there we go. All right, so I'm going to use that. Now, if you haven't received that, I'll just paste it into the Scout channel. and we'll try and figure out why afterwards. So let's just put that in there. There we go. All right. Well, that's good then. Well, at least it's sort of starting to work a bit better. And in a second, I'm just going to switch the screens back on, but I will just make sure that that is working fine. Good. All right. Good. All right, great. Well, I hope that's worked. I hope you received that. If it works, brilliant. But if it doesn't, it doesn't. It's as simple as that. You know, we're not going to put too much emotion to these trades. You know, if they win, brilliant, not getting excited. If they lose, oh, well, never mind. Not going to get too unhappy about it. And I think that's the key bit, really. You just look for opportunities to get into the market. If it gives it to you, great. If it doesn't, then, well, it doesn't. Anyway, well, that's already better than yesterday because it took us an hour to send that trade out yesterday, and this one was immediate. So happy days. Progress is being made. So reading the story then, the opening gap was very, very similar to what we've seen over the last few days. There's been gaps quite regularly now. On the gaps, doesn't seem to be really phasing the market in any way. Gaps used to be such a big thing, big deal, but now they're just kind of commonplace. They happen all the time. But divergence is the bit that kind of stood out to me yesterday at the low of the day. We had this bullish divergence. We had a lower low on price, but we had a higher low on the oscillator. Now, I know some of you are tearing your hair out thinking, oh, indicators are rubbish. You know, who cares about divergence? It's all in the price action. Yeah, I appreciate that. It is. But when I first started trading, that was a system strategy that I used to use quite a lot, and it was very successful for me. And I find it difficult to let it go completely. And I still like looking out for it. And when you find things like that, it just goes to show it's still a valid technique. And during that point of ignition there, the second leg, the lower low, that was the point of ignition. That was where we also started to see a bit of a balance point form. And if you pull a 50, a fib, should I say, get your 50 line in there, you'll notice that it cuts a doji perfectly, really, really nicely. This is on a 150 tick chart, but you can use whatever time frame you want, I guess. See what price action did around there. But on my tick chart, there was a nice doji there. So it's just a good move. And of course, we hit the extension of that balance point. If you'd drawn your balance point there, if you'd have kind of thought, a little doji forming, maybe that's going to form part of a balance point, you'd have been a genius if you could have figured that out. I certainly didn't. But it just works out quite nicely that you get this area. I've just had a message come through saying thank you for the trade. Well, I mean, it's too early. I mean, yeah, all right, it's a quick start, but that's 10 points, guys. It's not going to get too fussed about that. Even if you're trading 25 euros a contract, it's still a relatively small move. So, if you're only in a trade for a couple of ticks, then you're a different kind of trader to me. If you just want to be in a trade for a couple of ticks and you want to be trading 50 contracts at a time, then I could make you rich, no problem. But I don't trade like that. Because it could easily go the other way, and it could easily take 40 ticks the other way, just as quickly as it went, in our direction. So it's a volatile market. Don't trade it for a couple of ticks because you can easily get your pants pulled down. Okay, so balance point extension number 4 is point number 4 where we got to. So from here, it kind of started just to trend, really, didn't it? It was just a bit zigzag. You could put a fork in here, and price started to sort of respect that. I'm going to ignore these 2 fails. Actually, take those out. Get rid of them. Got a bit of a zoom on the median line on this fork here, which I found was interesting. So I kept that. And then we'd washed the median line here at point number 5. So we kind of cut through it, burst through it. Looked like we were going to head higher and didn't. Kind of came back and moved a little sideways, really. Washed the warning line of this fork as well. So with this particular fork, why did I use a regular fork and not a mod shift? Well, I mean, it was for me, a mod shift fork all depends on the layout of price action. Okay, so for example, if you've got a nice sort of swinging move, this is a terrible drawing. You've got a nice swinging sort of move and the swings are quite clearly defined and you can easily eyeball things with your eyes to see where the trend is going. You just use your regular forks. Just use your regular forks. Price is going to tag the median line and you just keep it going that way. But what I find sometimes with the mod shift is that if you've got a really, really steep line, I've just had an alert come in. Right, this thing is modifying stop losses. Right, okay. Well, I need to change the code in there because if it's going to send me an alert every time it modifies a stop loss by half a tick, then I'm going to get a lot of alerts. So I need to amend that. Anyway, slight distraction. Don't change the stop loss. I haven't changed the stop loss yet. It has. It's modified it by a couple of it's moved it from 1435 to 1655. But I don't think it makes any difference. I personally wouldn't change it. Just leave it. I'll change the code. What did we get to? We're looking at, oh yeah, these forks. So if it's just a regular nice swinging trend and you can easily see it, then you don't need to use anything other than just a regular standard fork. But if you find that the line is quite steep, or when you're drawing it, the A to C point is a better line. What do I mean by that? So you've got your ABC on a fork. Excuse me, I clicked the wrong one. That one there. You got your ABC on a fork. Okay. So typically an A line is going to cut through the center of B and C. Yep. So it's going to continue to go through that line. But if you find that the actual frequency, price frequency is slightly closer to the trajectory of A to C, use a mod shift. There you go. That's all you need to know. So with the mod shift fork, it's more likely that the price of the so if you think that the price action is more along that kind of route, use a mod shift. Let's show you what I mean by that. See? And that's what it does. Sends you that way instead. Steep price action, or if it's a mountain sort of setup that you're looking at, then a mod shift fork is a good way to do it. All right? Cool. So let's continue with this. I'm probably just going to need to Control Z. There's a couple of times on there. Brilliant. All right, so we washed the warning line here on this fork, and a warning line, just for the guys that are not familiar with forks, is an extension. All right, so once you pull a fork from your 3 points, that's pretty much what it looks like. You can add the 50s in the middle, the quartile lines, which I like to do. And you can add warning lines, which basically just provide sliding parallels of an equal distance between the median line and the parallels, the median line parallels, which is the outside lines of a fork. Okay, the distance between the median line and the outside lines, it extends again. All right. And the reason being is that Alan Andrews says that when price breaks outside of one median line, it generally tends to go and head towards the next. Right. Now, I've just been distracted because I've noticed here that we've gone straight into another pocket here. So we've zoomed through this area, which was nice. So we're currently however many points up. If I was a scalper, I'd take profit there, but I'm not. And the reason being is because technically it's a little swap zone, this. I'll show you what I mean by that as a swap zone, because look, price came up, hit resistance there, found this, and it's been oscillating between these two areas, and you'll find price action will do this. And it will zoom out of one, find consolidation in another, zoom out of another, find consolidation, zoom back, find the other one, possibly. And then from here, you've got one of two choices. It's either going to zoom back from one to another. Price discovery is going to oscillate between two value areas. And that was a previous value area, there's a previous value area, or it's going to stay in its current value area. When it's out of its value area, it goes into price discovery from one to the other. And it rotates. It'll just rotate. And that's a perfect example of rotation right there. So we found the areas that I've marked out, shaded areas, they are the value areas that price wanted to be in or was respecting. And at the moment, we're kind of in one of these little sections here. Yeah. So we've had the price discovery impulse leg there. Boom. Now we're into that mini kind of consolidation phase again. And it could go anywhere. I mean, it could bounce and come back down, join here again. It could bounce and go even lower and stop us out. You know, that is the risk to our trade. That could happen. But what we're ideally looking for here is for it not to do that, obviously. So what we're going to try not to do during this webinar is micromanage this trade. All right. If it gets stopped out, it gets stopped out. We have to kind of think like that. We have to almost expect that it's going to get stopped out, because then we're not disappointed if it does. It's a really cynical outlook that I have, but I am often of the opinion that expect the worst and hope for the best, and you're never disappointed. And you're often prepared for when the shit does hit the fan. But it is a really negative way of thinking about it. So I'd like to change that mentality one day. That's kind of served me fairly well. I'm only mildly cantankerous. I've got a couple of flash-ins on here. Let's just go and check some of these. I think it might be related to the trade. Yeah, no worries, Christian. Stop loss or TP. I think I posted that already, John, so that's done. Tommy, there's a median line just above there too. Keeps hitting it, pulling back, continue behavior. Might need you to post a chart, Tommy. It's just that's know which bit you're referring to there. And Sean says, we at least have 1336 as possible support. Tommy says 2 secs. Yeah, cheers. Yeah, you might be right, John. I mean, it's just a nice time of the day, isn't it, to get into a trade. It's when the volume comes in from London, and you know, it's good. So we'll see how it goes, but we're going to try not to disrupt the trade too much. All right, so going back to these swap zones. Once we'd washed this warning line here on the fork, there was a point of ignition as well, which was quite nice. Now, I guess if we could zoom into the bar action and have a look and see if there's any clues to try and spot where that point of ignition is, and where do you guys think it is? Right, I'm talking about this little area in here. Do you see it? Looking for a point of ignition, POI. If number 6, right, is the red candle, and for every number to the right of that is either 1, 2, 3, 4, 5, 6, 7, 8, and so on, what number candle is the point of ignition for you? Okay, so if you count, I'll zoom in a bit further maybe. Here we go. So 6 is the red candle, and 1, 2, 3 is every candle to the right. Which number candle is the point of ignition? Yeah, could definitely say that. I'm wondering even if it's number 1, because you've got mirrors here, and that for me is quite a sign. But I think you're right. I think number 6 is pretty much where it really kicks off. But number 1 is the first clue. Number 1 is the kind of, oh, okay, we got something going on here. So number 1 pretty much alerts you to wait for a kind of a hold of a pullback. So you've got this kind of mirror move. That's a rejection. Sellers have jumped in. Buyers have just kicked them to the side and said, nah, not today. And then you get this kind of mini pullback as they try again, and then buyers just step on them. Off you go. But that blue mirror bar there is pretty much your signal. And I think, yeah, candle 6 is your point of ignition. So it was a nice move from there, and you didn't actually get a retest. You didn't get a bait, because sometimes what will happen is you get these kind of moves, and then you get this little kind of moving down, quick bait, and then go. And you didn't get that bait. It just went. So you'd mark that level out on your chart. That is where buyers were. There'll be dragons here, according to the sellers. You're right. That's a very, very good point, Christian. Very, very good point. So Christian says, but you got that bar one like 10 bars back. So I think you're talking about this blue bar here. Yeah, you're right. So that's a good shout. And that's a nice spot, because that is where buyers tried to step in. Sellers kind of temporarily took control, but buyers managed to just squeeze it back, and it came back to that zone, which is pretty much where that initial point was. So yeah, that's a nice little read. You could say that that's a wash. It's just a wash of the warning line. I think if that warning line was a valid fork, people would have just been thinking, oh my God, it's game over. We're off down to 3,000. I'm exaggerating. But you'll also notice as well that the reason why it held there, keep looking left, guys. Look at that. What's there? Remember I talked about bait? The original point of ignition, you could even say, was that, and that's the bait. That's the market giving you a gimme. You know, that's like a gift right there. Because that was the original point of the move, and it's tested it to the pip before it heads off. They're the things you want to be looking out for. Now, I know some of this stuff, if you're new, some of this stuff might be a little bit complicated. You might think, well, this is just a mess. This is just blobs of blobs of blue and red. Wow, that was harder than I thought. Blobs of blue and red candles all over the place. How are you supposed to read the story? Well, you might not be able to do it straight away. I mean, it's taken me the best part of 6-7 years to start to really get the hang of this. And, you know, really quite intensely over the last 2 years, certainly in the last 6 to 12 months, it's been ramped up to max as we've started to get more guys specializing in this area in the community, you know. And so the learning curve is steep, but once you get over the first peak, it's a great view. You can see some cool stuff. So just persevere. You can do this stuff. If it is a bit confusing, a bit complicated, you're not thinking that it's right, you know, don't just persevere with it. I'm not saying it's a license to print money. I'm not going to give you any of that bullshit or tell you anything that it isn't. We're not reinventing the wheel. It's just market geometry. But it's very, very effective. Anyway, so that is the story for yesterday. And now, well, we've just dropped off. See what? I mean, that is just sickening how accurate these little areas are. But look at it. I said if I was a scalper, that's where I'll be taking profit. Either somebody's listened to me and done that, or it's been telegraphed and it's a clear area. But, you know, one of those things. Now, if this does, I said it already, if it does get stopped out, then so be it. There'll be other opportunities. But if we're stuck in this kind of rotation phase, then it could get choppy. We've just got to be aware of that. It could get choppy. Of course, what we're looking for is for it to just burst through with a bit of strength. So we will see how it reacts. Okay. Now, you know this already, but I've got to read it out. Trading financial markets is risky. It involves the risk of losing our invested money. Webinars are provided for educational purposes only. No investment advice is provided. If you decide to enter a trade on the back of any of these webinars, videos, or articles, then please do so entirely at your own risk. If you're not doing this already, guys, then you need to ask yourself why, and that is risk management. I think I might have posted something on the FAQ page. And I'd recommend you just head over there if you haven't done it already. I think that's the link. But I've updated it. This is where I'll probably find out that it isn't that. And something's being very, very slow, so I'll just wait for that to catch up. And while it's doing that, let's just see if I've got a message response from Tommy. Tommy, I think you might have sent it to me in Telegram. Let's have a look. You sent it into the group. Nice one. There we go. So guys, it's all in the group. You can check it out there. If you've got multiple screens or what have you, you can see it all at the same time. But in the meantime, regarding the FAQ page, so to get to the facts, just go to member dashboard, log in, and the facts is the top left, I think, FAQ. All right. But the bit to really, really pay attention to is these kind of like, you know, I put it as I'm new, what next? And I kind of explained the process of how to get everything sorted. But in step 4, there is a really, really important bit here that everybody still needs to pay attention to. And it's the basics of how we work, which is just never, ever risk more than 1.5% of our balance on any trade ever. Now, I guarantee that of this room right now, at least half probably do go more than that. Let's be honest. The ones that kind of stick to that solid risk management are the ones that will, A, last the longest in this business, shall I say, but 2 are the ones that are more likely to adapt that kind of professional mentality. Because if you're doing more than 1.5% maximum per trade, and you go on a losing streak of say 10 to 15 trades, which is possible, be a bad streak, but it's possible, then you wipe yourself out. You'll create a hole in your account that will possibly be too big to overcome. And I know it's kind of goes against your kind of, well, how else am I going to make a living from trading if I don't risk more than whatever it is, because my account is, let's say, only £2,000 or £5,000, which most retail traders are probably playing with. Then yeah, I can understand that. But it doesn't give, what am I trying to say? I don't want to be lecturing here, but it doesn't make much difference, basically. If you go above that, you're risking too much. The chances are you could get lucky, but more likely over time, you'll probably create a hole in your account. So yeah, that's really, really essential. You've got to try and stick to that. The risk reward ratio is what kind of makes you profitable with your risk management. The set and forget mentality is to just basically make sure that you're doing exactly that. Don't get out too early. You know, I've just joked about, you know, getting out of that trade up there. If you did, then you're less than 1-to-1 reward to risk. You know, less than 1-to-1. You don't want to be doing that. So you've got to stick to the plan. And our current win rate is pretty good, but let's assume that it's 40%. That means we're going to lose 60% of our trades. Now, you guys are statisticians, probably. You're numbers guys, numbers ladies. So the statistics are pretty much the reason why you stick to these rules. And the statistics don't really lie to you. There's a high volume of losing trades. All right, we're going to lose 60% of our trades. That's a lot. The reason we're happy with that is because of the reward to risk ratio. We know that if we look for a minimum of 3-to-1, and often we're looking for more than that, then for every win, let's say we get 3%, but for every loss we lose 1%. And that's based on maximum of 1% risk per trade. All right, so on a £2,000 account, 1% risk is 20 quid. On a 10 grand account, it's 100 quid. On a 25 grand account, it's 250 quid per trade. That means if your stop loss is hit, that's how much that trade cost your account. Yeah? Hopefully easily understandable. And 3-to-1 means that for every trade you win, you're going to win 3%. All right, so the maths is pretty simple. You're going to lose 60% of your trades. So out of 100 trades, If you lost 60 of them and each one lost you 1% of your account, you're going to lose 60% of your account. Let's just say you're going to lose 60%. Yeah. We're going to win 40 of those 100 trades, and we're going to win 3% on those ones. So that's going to win us 120%. Add the two numbers together. Net result is a gain. All right. So yes, you lost more trades than you won. Who cares? Because the ones that you won you back a lot more than what you lost on the losers. And it's just a numbers game. So I know that might be teaching a lot of you to suck eggs because you're a bit more experienced, but it's really to kind of target the sort of the less advanced, less experienced traders among the group. It's really essential that stuff is understood and like it becomes part of your trading mantra. You have to have that in your trading plan. All right. Okay. So pretty much back to square one on the trade. So what we're going to do now is we're going to go through and take a look at the regular charts. Oh, well, let's just take a quick look in on the FTSE trade for a sec. Let's just take a quick look in on it. Oh, all right. All right, well, we're still in this kind of expanding pivot sort of play at the moment. Wow, we're right bang in the middle of it, actually. We're in the no man's area or no ladies area. Right in the middle of that. Avoid the middle is the rule with these sorts of things. Trade the extremes. If you want to play fade in these moves, sell at the top, buy at the bottom, but avoid the middle. So at the moment, we're trading water. So one of those things. In fact, actually, $46. All right. Okay. Stop loss is at 46. No, it isn't. Stop loss is at 61. So we moved it to break even. All right. I'm away from my trade terminal at the moment because I'm on the server. All right. Okay. So we'll come back to that later. Let's go in and check in on the DAX charts. Come on, Sierra. You got to remember which ones I use. Okay, here we go. So, cogs were turning there. Let's just start where we usually start. All right, so the TPO, what do we got here that's interesting? Well, yesterday, I think pretty much because of the German elections, we had this piercing to the downside of the previous day's value area. It almost looked like it was going to be a trending day down. It looked like we were going to test the low of the Hammer Island over here, but we didn't. We held above it, and that for me is a bullish signal. It adds a lot more weight to the bullish idea, and we're going to look at a lot of ideas that are bullish today, simply because I am fundamentally bullish. But of course, we will take a look at some of the bearish ideas too. So what have we got on the chart that's interesting? Well, we've got two outstanding POCs here above us. We've got the all-time high above us. We've got this consolidation zone that's been marked out that's interesting to the upside. And we probably should mark out that there are a couple of tops up here. So there's a bit of resistance to the upside. As far as the profile goes today, you'll notice here that we had the point of control on FXCM's data, at least. It was around about, what, 52? And price seems to be slicing through that at will today. And we're almost creating a double distribution on the day today, either side of that point of control. What's a point of control? If you're new to this sort of stuff, point of control is the area where price traded most frequently during a session. So it's the point of the highest frequency where most orders were placed. Why is it interesting? It's interesting because it is classed as a value area. Well, I'll change my terminology. It's classed as an area where price likes to return to, and it likes to revisit. Technically, a value area is where price has been trading for the majority of a trading session. And the grey area of these profiles is actually the value area of the day. But within a day, you get value areas as well. So I don't want to blur the lines too much. But a point of control is where the most amount of volume was traded during that day. And it's represented by this blue line. always in the gray area. Okay. And what we're looking for on these particular charts are the low volume nodes. All right. Low volume node is a pocket. It's an area where price didn't want to trade very much during that day, leaves behind a vacuum, and price will respond to those vacuums or low volume nodes in one of two ways. It will either bounce away from it like a repellent, like a magnet pushing you away because it doesn't want to be in there. So it gets repelled and bounces back away from it, or it zooms straight through them because, again, it doesn't want to be in it. So it kind of gets in there and just runs straight through it. So you look through areas and mark them out in your chart. You can use them intraday, like we're getting one today at the moment, and you can use them retrospectively like the previous day's ones. All right. Really, really useful to get to grips with TPOs. TPOs are not always available on standard charting platforms. You will probably need a premium one at some point. And this one is Sierra Charts. Okay. All right, daily chart. That's the key one, really. Majority of my analysis is based on this at the moment. And it is simply the case that I believe we're off to 14,000. And if I stand to be incorrect, then fine. I don't mind. But that's where I believe it's going to head to. And there's lots of different reasons for that. But effectively, it's based on a balance point. It's based on an extension of a move. It's based on lots of different reasons. We're going to reach an upper median line of this the upper median line parallel of this fork, should I say? And there's a time thing as well. It's taken a certain amount of time for us to get from here to this high. Once we've had a correction, it will take a similar amount of time to get to the upper median line parallel, and it's just lots of sort of analytical tools that agreed with certain price levels on my chart, and it points at 14.1 as an interesting level. Anyway, so that's the daily chart for me. I was a little bit incorrect with this prediction that we were going to get a retracement back to 13.2, going to hold there and move higher. Didn't quite do that. We actually extended again the same distance lower to find a base at this mountain. We hold this and continue to move higher, which it looks like we will, then there's an opportunity to get a huge swing trade. But I don't think anybody ever probably trades for 1,000 points on the DAX, because it's just maybe I'm wrong. Maybe people do, but I certainly don't. Not 1,000 anyway. That's a month for me. All right. Any interesting observations on some of the other charts then? So let's go and take a look at this 4-hour chart. Now, I have changed my fork here because the daily chart is actually based, I believe, on that pivot there. But if you pull the fork back to this one here, look at that. It's an interesting A-line touch, isn't it? When you get that kind of action, it's interesting. I wonder whether actually there's any, whether that line, let's just make it parallel to the fork and just test it. Actually, I can probably draw. Sometimes it's just interesting to see whether a similar trajectory has been seen and observed before. That's interesting. And so yeah, I'm appreciating that I'm kind of going off on my own little world here, but I'm looking for touches on price action. Anyway, I'll go and play with that later. But Sierra Charts has got a cracking little tool here, so you can just draw any line in any sort of shape, right click on it, tell it to make it parallel to that, and there you go. Oh, excuse me. Yeah, it's a really nice feature. So you can just go and play with parallels to your heart's content. So what does this fork mean? And why have I used a regular fork? It's exactly the same as before. I've used a regular fork because I believe that these are the key pivots. That's pivot point A. That's the major high. And that is potentially the major now low. So they're the three major pivots. Possibly a bit fishy. See, it's not really been confirmed. But if it is, and if it's currently speculative at the moment, then I like the way the A-line has reacted. It got a perfect touch there. Cut through a sort of mini balance point area there on this BC line. So I kind of like the idea of it. And if that does stick, then it allows us to expect to move up to the median line. So we'll see. And I haven't used a mod shift fork because I didn't need to. I looked at how a regular fork was first. It seemed to fit the bill, and I've just gone with it. All right. So that's the 4 hour. So a new fork, bullish, that I'm sticking with for now. 60-minute chart. We're still looking at this ACR line set, and may have to get away from this soon because it looks like that double bottom is pretty significant. I mean, the hammer island looks different on our 60-minute chart. That's it there. What do I mean by a hammer island? Just understand candlestick formations, basically. A hammer typically looks like that. No, it doesn't, because I'm right next to the edge of the chart and it won't let me draw it. A hammer looks like this. I don't know why I'm telling you this. You know all this stuff already, I'm sure, and you can Google it anyway. But that's a hammer. And if you get that kind of price action on its own, you know, when it gaps lower to it and then it gaps away from it, then it's a hammer island. It's on its own. It's a little island. That's the reason. Anyway, okay. It's pretty bullish, basically, is I guess the point I'm trying to make. So we've had the hammer island, plus we got a test of it with some pretty significant political uncertainty coming out of Germany, and even that couldn't break below the low. So I think that's pretty significant. Maybe now we have to kind of think that it's not going to actually test this reaction line. And if that's the case, then fine, no problem. So what's an ACR? An ACR is an action center reaction line set. It's part of Alan Andrews' work. I'm not going to go into much detail. I'm going to recommend that you just go to the members section and get the course. And I'll show you where that is, if the website wants to work. It's asking me for a password. Do you know who I am? I made you. Okay, there we go. So it's the third one in, and just download it. Now it's pretty intense in terms of its language. It's pretty old language, so it could be tricky. The drawings are line drawings, so you know it's going to take a little bit of concentration to try and sift through the stuff, and a couple of reads probably to really absorb it. But nothing I can tell you is going to provide you the foundation that will. But if you're not familiar with it, then that's the missing link. So go and fill that gap. All right, so it's the action center reaction line. So in a nutshell, it basically means that once you've got this kind of center line in place, price will often go and find, it will create a reaction or an action zone, if you like, from the first touch of the line. Once it breaks through a center line, it will often go and find an opposite and equal reaction. And so, and you can see it time and time again when you draw a good center line from good pivots, which is key. If you're pulling it from any old tap, then it might not get a significant reaction. But if it's good, solid pivots, then often price will have this reaction. And in this particular case, it was quite nice because I was pulling a balance point through this little area here where we had a nice switchback. You'll notice there. You can probably see it easier if I zoom in. Yeah, nice sine wave. Perfect balance point. So you extend that, pull it from the top, 50% through the middle, gives you an extension line. It just happened to tag the bottom of the reaction line. So that was just a nice level of confluence for me. And I thought, well, if price gets there, I'm definitely going long. But it didn't. Created a bit of a hammer island, and of course we didn't break below it yesterday. So, you know, we may well have seen the low for now, but time will basically tell us. So I'll keep it there for the moment, just in case we're proven wrong. Okay, we've got a 2,500 tick chart, 2,500 tick chart. And the horizontal lines, should I say, are IBs, all right, the initial balances, opening ranges, 2-hour opening range in this case. And I like to look at this just to see which way price breaks. So yesterday we broke out the IB to the upside, and the probability says that if you do that, you're often going to settle or close above the IB. We did do that yesterday. So a little bit bullish. A couple of things that are interesting. A lot of different dojis forming up here. A lot of different dojis. So I'm not entirely sure what information that's going to give us. But what I like to look at is to just sometimes pull the lines through these. So at the moment, although my cursor's all the way over the left, I'm looking all the way over here. In fact, I'm looking at that doji. Now I'm looking at that one. The next one I'm going to look at is this one. But I'm pulling the line way over here just to see if it's touching any others. So this is the first doji there on the right-hand side. Now I'm looking left. It doesn't tag anything else. So now I'm going to go to the next one to the top on the right-hand side. And now I'm looking left. Doesn't tag anything else. And you just kind of just pull them through other dojis and see if there's a zone where other dojis are formed in that area. I'd just like to look at that just to see if there's anything interesting. But at the moment, no is the answer. All right. Let's go back to basics here. Swing work. All right, let's duplicate this chart. If you're ever unsure about the bias of a chart, or if you kind of always got too many things on one chart, and you're just a bit confused as to what's going on here, what actually is happening, then it's always a good idea to just reset, just clear it up, and it's just that alone just sort of makes you think, because it's just clean, it's done. Now, where are your swings? That's the first question. Your major swing, one there, right? Pretty much. Zoom out, the other one down there. Where are your minor swings? Well, you got one there, you got one there, you got probably one there, maybe one there, here, there, and there. So you can technically say that that's still a minor swing. Yep. So the job now of this bearish trend, which is what this is to take out that low before it takes out. Well, it can't take out that. If it takes out that high, then we're no longer bearish, are we? And just one other observation. If we're assuming that this is now going to take off to the upside, just watch whether that is a balance point starting up there. Might not be. It might not be. But if it is, then we're off. But who knows? It might not be. Might continue to just dig a little bit deeper. And we might actually have to get into this little area here, which would stop us out. Let's just tidy that line up there. My thought process behind this kind of extension is that often price will move like this. Okay, it's like an AB equals CD. What I mean by that is that AB line there is equal in distance to that CD line there. Doesn't always work out like this, but we're talking about this impulse leg and that impulse leg. Yeah. So we'll see whether or not that actually does start to form anything. But I got a bit distracted there. I'll come back because my point I'm trying to make here is we are still trending down. We are still trending down according to the minor swings. We're bearish below 1397. However, the signs are starting to suggest that we're starting to see a turnaround here because we've got a double bottom. I wonder whether we've got some hidden bullish divergence here on the oscillator because we've got a higher low. I wonder if we've got a lower low on the oscillator. I'm just going to use a basic 14-period RSI. You can use whatever you want, but I'm just going to keep it simple. Just to see. Let's take that off. Just tenuous. Nothing really significant. Yeah, I mean, it's really, really, really insignificant. Nothing really to gain from that. But it's just the early indications, isn't it? It's just the early indications that something's going on here. Something's going on. But you just got to stick to your lines. Stick to your lines. This is also quite a nice example of how to draw your forks, because you've got your swings now, so you've got your pivots. So pull your forks from any of those three pivots. Practice your line work. So let's go from one of these. So there's one there, there's one there, and there's one there. That's pretty steep. In fact, I think even if you did a mod shift or any kind of other variant of the fork, it's still not probably going to give you that much information. Perhaps the shift. Kind of like that one, actually. That's quite a nice capture, isn't it? Apart from the fact that it's made a mockery of it to the upside. But anyway, what I would do with that one is this. Delete. And I'd move on to the next one. Or even just take any of them that you like. That one's quite interesting because the median line straight through the gap. Tagged. Reacted to the downside. Let's come back up to test it again. Interesting. Then we'll check this one. Didn't quite get there. Median line almost cut through that gap as well. So it was almost a nice looking fork, actually. And when you get these kind of, I mean, that would be almost beauty, almost beautiful in terms of the way that it's reacted. But there's no point in curve fitting a line because the market doesn't care what your lines want to look like. Doesn't care. But we've zoomed out to the upside here. So if we were to assume, and it's not necessarily going to be the case, but if we were to assume that this is the next one, then you would draw your fork from there. Now we've touched the median line. Look. So one of three things will happen. It's going to continue to just move sideways, or it's going to burst up to the next median line, or it's going to be rejected and continue. So you just watch price action at bar level now because we've got the major swings. The major swings are basically saying that we are bullish if this swing is confirmed. Now that's technically not a major swing low until that high gets taken out. So I may have been a bit fishy with that one. But we're in a retracement leg. Minor swings are down. So following the trend is a sell. So if you're buying, you need a minimum of 4 to 1. Because it's counter trend. It's fading. Yep. Okay, so I've got a couple of things flashing around here. Let's have a look. So, Chris, could you argue that the stop loss is a POI? So, Hugh, I guess you're talking about the trade that we've got into. And if that's the case, yeah, you possibly could. Whatever amount you start with, you have to build it up slowly, and risk management is most important, and your earnings will be sorted once you build it up over years. Yeah, absolutely, Mo. This comes back to that risk management piece we were talking about earlier. I know I went off on a bit of a rant about that, and I know John does the same sort of thing, but it is just, it's if not is one of the most important fundamental mistakes that newer traders make, which is just not gambling, that's the wrong word, just over leveraging, because they believe that by doing that they'll gain faster. Well, it's not the case. You'll lose faster. You'll just account termination. New Zealand dollar trade at least is getting there, Sean. Yeah, that was a cracking one yesterday, wasn't it? That was good fun to do the analysis on that one. Every single fork that we pulled on that chart, on any of those charts on that market, was just like art. Not through skill of me, or it was pure luck. It was just a nice setup at the right time. It was great. I love it when it's like that. I remember I watched one of John's videos ages ago, and he was doing a yen chart, dollar yen chart, and he was just putting forks left, right, and center, and each one was kind of pointing to the same level, and he was getting excited about that. And it was a similar moment for me yesterday with the Kiwi. It's when it happens like that, it's great. It's just really nice. It makes you just really believe in your lines, and you have to have confidence in your lines, because it means you can put a trade on and ignore it and be confident. You're not going to be scared. You just know, if it doesn't work, it doesn't work. If it does, then, so be it. So John's jumped in and said, an action line can be pulled off any action point if you pull off the last POI, which is the point of ignition, where price dropped, it catches the low. And he's posted a chart, so go and check that out in the comments. I don't think I can share that on here because it's just routed to the Sierra chart screen, because it's on server. Do sometimes use fulcrum for an A, which I think John has responded by saying not for a fork, but for an ACR you can. And Hugh has responded to a comment I made. And then John's piped up saying, if you don't do it, you may as well forget about making a living trading. I presume that's talking about the risk management piece again still. And it's just going to be your hobby that you keep popping money in. And that, and again, I've heard John talk about this in his webinars on Thursday, which again, if you're new to this community, then John takes over normally a Thursday webinar. It goes through lots of different pieces as well. If you've not seen one of those before, make sure you turn up. Some great stuff in there. John's a very experienced trader and he can share a lot of information. So make sure you're available for that. But he's right in saying that if you are just constantly depositing money from your card into your trading account and you're losing it, and it's like a monthly subscription, then you've got some serious questions to ask of your trading decisions. And more likely, the reason that you're having to do that is because you're not sticking to that fundamental rule of risk management and lot sizing. And once it clicks, you're pretty much ready to go. Anyways, so coming back to the chart on here, because we're starting to, I'm using a webinar that doesn't have a time limit, so I could probably go on for ages, but I want to go and have something to eat. Maybe have a coffee. So I'll probably wrap up fairly shortly. So at the moment, just keep your swing work going. 3 basic layers that you have to pay attention to, and that's your major swings. All right, so zoom, just let your eyes adjust to the chart. Give the chart to a 3-year-old and ask them what direction is it going. They'll probably be able to help you with that. Use a zigzag indicator. Whatever you want to do, just get the major swings. Understand the major pivots. And then zoom into or have a look at the minors, what's going on within those legs. And that's pretty much going to help you understand which way you need to be on for trading. Follow the trend. All right, so at the moment, we technically should be selling this market because it's still in minor downswing. So what I do is I say, if I'm following the trend, I want minimum of 3 to 1. If I'm counter trend trading, which technically buying is at the moment, then I want 4 to 1 minimum. And I probably should just actually update the, with the numbers on this one. Give me a sec. So I can't take credit for this one. It wasn't mine. It was, let's just copy one of these. And the reason I'm doing this on a spreadsheet is because it's easier to embed a spreadsheet into the website for transparency purposes, basically. So everyone can see it. And it was around about 8:36. It was long. It was that. And it was 1340 with a stop loss at 1314 and profit at 13,148. That's a reward to risk of 4.2. Now, this particular spreadsheet is interesting because it's providing me with the results, which I can share. And we can validate this by going through the chat channel, but it's also providing a little bit more information. It's providing the win rate, which is good. The number of points or pips, which doesn't really make much difference, but some people still believe it's important. And the growth, which is the key bit, really, as to how much is adding to your account. So this particular spreadsheet was formed simply because I wanted to keep a track of my automated trading, the ones that I was not activating manually, but the ones that were coming from the program that I built. This is my forward testing. And I started doing it at the beginning of October, and I've just carried on doing it. So it's been going for maybe a month or two now. Now, I've been risking about 0.2% per trade. There are a couple that have changed from that amount. The green ones are manual. I think that's green. I am colorblind, but I believe that's green. Some trades that either it didn't activate because I was in a webinar and I didn't see it or whatever, and then I went back and did manually, or were just my own manual trades based on the logic from the program. Anyway, so some of them vary from that, but none of them go over 1.5%. None of them go over 1%. All within that. And there have been many, many trades that you guys have followed in the channel where I have kept it to profit target and not taken it out early. And it's just that kind of discipline that I used to struggle with, and a lot of traders do struggle with, but it's so important that you stick to the plan. Otherwise, your win rate is just crap. Because if you're taking profit at 10 points, yeah, it's a win. Brilliant. You get a W, but it doesn't mean anything. You want to hit your target because that's what your reward to risk ratio is helping you with. So at the moment, this is a pretty good win rate. I don't suspect that I'm going to be able to maintain that. A break-even trade doesn't affect anything. So you could, if you put a loss in there, it would bring it down. If you put a win in there, it would bring it up. But a break-even doesn't do anything. And yeah, so it's been a pretty good month. I'm happy to kind of get to a point where I'm going to roll this out. I wanted to do 3 months really, just for a better sample. Try and get 100 trades, but I don't think I'm going to get that. 50 would be a good number. But the growth has been pretty good. I'm happy with that number. So yeah, record keeping, guys. Got to make sure you keep your records. Analyze your trades. Go back through all of these losses and start understanding why. What could you have done? Analyze. Check it. There are times in the market where the market is quiet and you're looking for something to do. Then analyze your trades. All right. So I'm going to jump into a quick summary mode, and let's just go through and zip through these charts quick. I just duplicated a chart here. I am going to use it. All right. That's fine. Here we go. This is for the benefit of YouTube now. Good morning, guys. It's Chris from DaxTrader.co.uk. It is Tuesday, the 21st of November, 2017. This is the DAX Technical Analysis Summary video. We've just completed the premium webinar with the channel. I've gone through lots of really interesting bits and pieces, some good conversation in there as well. But we're going to have a look at what we've gone through. Now, we're currently in a trade, and we went long. So we're doing okay on that for the moment, but it's too early to say how that's going to work out. Now, before we continue, trading financial markets is risky, involving the risk of losing our invested money. Webinars are provided for educational purposes only. No investment advice is provided. If you decide to enter a trade on the back of any of the webinars, videos, or articles on the website, please do so entirely at your own risk. All right. Okay, so at the moment, we have started to produce a bit of an inside day. The IB is pretty small. We're inside the value area of yesterday, oscillating around the point of control for yesterday. What we're looking for here is a break above the recent highs, and ideally a resumption of the bullish trend to confirm that we are no longer in this retracement leg. What do I mean by the retracement leg? Well, the best chart I have to show you that is this. So that is a pretty bullish chart based on, wow, a major down leg down there, which you can pull a simple sort of pitchfork from, if you like. And we're talking that we're in a bullish phase. This is a retracement leg. All right, so the major swings are bullish. However, the minor swings are bearish. And these horizontal lines are just the recent swings, the recent highs. And we will notice here that we've made lower lows, lower highs. And this current one at 1397 is the trend defining trend defining lower high. Let me get my words right. Now, what's interesting here is this, and that is that this particular low here, its job was to take out that low, and it didn't. Might be significant, but it's only going to be significant if we take out that level there. Okay. So at the moment, we're kind of speculating or anticipating its move, which is not always the best thing to do, but we'll see how it works out. And one thing we've noticed here is that if this particular part of this move turns out to be a balance point or a zigzag, then that could actually suggest that price action could move and do something like this. So that's what we're waiting for. We pull the fork out on here to kind of say that price is often going to touch the median line, which it has. Now it's just got its decision point as to what to do next. Is it going to continue to break through this and then head towards the higher median line, the upper median line parallel? Or is it going to be rejected at this level and come and test the lower median line parallel? So we'll keep an eye on it. So at the moment, minor swings are still bearish, but we're looking for a decision to be made today as to which direction we're going to continue to head. And we believe that it's going to go higher. All right. And I'm probably going to keep that chart. Let's just move on. We've got a 4-hour chart here where I've pulled a fork from those points there, which I find interesting. Nice touch on the median line here. And we'll wait for price to react to those levels. But if it comes up to a median line, then that's quite a move, 400-500 points from current price. Okay, what else have we been looking at today? We looked at the 60-minute chart. Where are you over here? We looked at an ACR line set here, which says that often when price gets an action, it finds an opposite and equal reaction on the opposite side of the center line here, which was a nice balance point zone. Bit of confluence here with a Fibonacci tool that I've used, which just pulls it from the point of ignition with the 50 line through the balance point, which provides us an extension. Now that extension married up nicely with the reaction line. So I was half expecting for price to come down here. However, price has failed to break the low of this island of price action here. And if political uncertainty in Germany is not enough to dislodge this market to head lower than the recent low, then what more of a bullish sign do you want than that? It's partly our thinking. Okay, we looked at the IB on the 2500 tick chart. The IB is the initial balance, the opening range, the 2 hours of opening price action for a daily period. And you'll notice that often when price breaks one way or another through an IB, that it will tend to close in that direction as well. Last night or yesterday was no difference. Zoom through the IB here, and we closed above it for the day. Now we've formed a pretty low IB. We're 40 minutes into the IB, and we haven't really made any sort of significant movement one way or another. So we'll keep an eye on that as it progresses throughout the day. Not a lot to say on the VWAP. We traded in the second in the top half above VWAP pretty much for the entire session yesterday. It was a nice trending day. Nothing more to say than that. As for today, the bands haven't really been widened, but we probably got some bullish divergence here. Actually, my money would be on that if you put an oscillator in there. And it looks like we're actually on for. Well, I was going to say it looks like we're on for another trending day higher, but I'm really kind of going on what I would like to see rather than what actually is happening. So we'll see. Not a lot to say on the pivots other than we opened above the daily pivot. And so really want to keep an eye out on the R1, which is at 142, and the R2, which is at 230. That could be restricted for price action. If we break below the current low, then I might have another attempt at along the daily pivot. And below that, I'll just be watching to see what happens. All right, I think that is everything. Just a very, very quick run through of the story from yesterday. And there we go. We'll get this up in the article as well on DaxTrader.co.uk. Make sure you go and check that out. Opening gap, bullish divergence down here. Point of ignition, closed the gap with a balance point as a doji almost perfectly at the 50% line, which was nice. We then walked into a fork, which trailed price action for a little while. We washed the median line here, but failed to make any progress towards the upper median line parallel. We baited the highs and were rejected, washed the warning line of the fork, which is the, if you like, sliding parallel, equidistant from the median line to the lower median line parallel, extended one more time down. That gives you a warning line. And from there, we kind of started moving into a sideways range where we had a mini swap zones that price was bouncing between. It was targeted out by these little areas here, which price did react to this morning. When we got into the trade, I kind of called that area might slow price down, and look at it, it turned into a mountain. It was just, yeah, it's nice when price action does that. But it works the same on pretty much any market. So what we need to see is price break out above this with a bit of force. And if it does do that, it will probably find some further resistance here. Come back to test this area again before moving further to the upside. That's where I'd like to see happen. That's what I wanted to see. So let's get through that, take out the highs for the day, and come back to retest this little zone before moving higher. That's what I would like to see happen. Anyway, guys, so yeah, good. We're already long. We're still long on FTSE as well. We managed to take out 100 odd points from yesterday's trade, which was nice, 107. So the forward testing is still going well. If you want to know more about this sort of stuff, just go to daxtrader.co.uk, click on the About DaxTrader Premium, and you can see the trades there for yourself. And yeah, all ready to go. So hope you have a cracking trading day. We'll be back again tomorrow with another video. And until then, take care.